Hello and welcome to the Columbus Metropolitan Club. I'm Mike Voinovich, a member of CMC's Board of Trustees and the Office Managing Partner at BDO. It's great to see such a lively crowd here today for our banking discussion. Thanks for joining us. CMC is pleased to present today's forum, Banks' Impact on the Regional Economy, sponsored by the Robert Weiler Company, the Ohio Capital Corporation for Housing, Economic and Community Development Institute, and Accenture, and in partnership with the Columbus Chamber of Commerce, each of whom are represented here by many friends and associates. Won't you please help me welcome them? Now please welcome to the stage Vice President of the Capital Corporation for Housing, John Welty, to introduce today's speakers.
Well, good afternoon. It's great to be here with so many friends and supporters of Ohio Capital Corporation and the affordable housing work that we're doing across Ohio and particularly in Columbus. And when we look out, the need for affordable housing is incredibly great. And our partners at ECDI, and the many banks and our partners on the stage here, we've got a need of over 50,000 affordable housing units here in Ohio. And it's the banking community that really helps to support that work, the nonprofits that help that. And we're pleased to be able to sponsor today's forum, talking about the banking community and their impacts that they're having on the community. And part of that is affordable housing. So I just wanted to make that known that in addition to the traditional lending and mortgages, they're investing back in the community in the space that we're committed to as well at Ohio Capital Corporation for Housing. So with that, we know that CMC is here to convene weekly public conversations on important issues of our times. Banks contribute to the well-being of the community in many, many ways. Special incentives, and they also go to support small businesses and small enterprises. Home ownership, education, mortgage lending, contributing knowledge and service on our local boards and back in the schools, as well as supporting many colleges and universities that call Central Ohio home. So as Greater Columbus continues to grow and thrive, the population and the banking community is here to support that work. And they're playing a very important role in terms of the community and what's going to happen in the decades to come in Central Ohio. So if you would, please help me welcome President of Key Bank, Central Ohio, Melissa Ingerson. Columbus Regional President of PNC Bank, Mary Auk. And Central Ohio Regional President, U.S. Bank, Steve Bennett. And our host for today, President and CEO of the Columbus Chamber of Commerce, Don DePero. Don, the stage is yours.
Thank you, John.
Thank you.
Thank you, John.
Thank you.
So we appreciate all you're doing in Columbus and Ohio.
Thank you.
Thanks, Steve. Hello, everyone. It's great to be back with you. I'd like to just start quickly by congratulating Jane Scott and her team here at the Metropolitan Club. If there's a conversation in our community, it happens here at the Metropolitan Club. Congratulations on what you've built and everything you do. Jane, thank you. So we are going to jump right in, and our panelists were wonderful enough to provide some questions for us. So a little bit of an open book test. We did give them the opportunity to prepare, but I might have spiced it up with a little question or two if we get through all of them. So, we know that consumer behaviors have changed dramatically over the last decade or so, especially with younger consumers. How are you adapting to still be relevant to your clients? And Mary, we'll start with you.
All right. Thanks, Don. Well, yes, certainly consumer behaviors are changing, as are their expectations of customer service. So I think we adapt by meeting our clients where they are, whether that's addition of digital capabilities, which is obviously important to the younger generation, but obviously still using our typical service delivery model, our branch system, our corporate bankers, those personal touches. So it's important that we don't migrate too quickly ahead of the consumer demands, and it's important that we meet them where they are and really add value to help them achieve.
Great. Anyone else? Steve?
I think we're all doing the same thing. I mean, the digital revolution is changing our business without question, but at the same time, we have been talking about the death of branches for 25 or 30 years, and they're not dead. They're very relevant and very much an important part of our delivery model for all of our clients, regardless of age.
I think at the end of the day, a lot of us still like that personal touch.
Absolutely.
All right, great. What are the greatest challenges facing not only banking, but the financial industry in general over the coming years? What do you see on the horizon? Melissa?
So talent. That should not be new to anybody in this room. We are all competing for talent in this market and in many markets. And so in banking, it's easy to think that the talent means we need accounting majors. And we certainly need accounting majors, but we need nimble learners. And we need technologists, because the second piece that's really a challenge for the future is technology. Technology has brought great things to banking and to, again, so many of our industries. It also has brought cybercrime to new heights, and I tell many people it's not a matter of if, it's a matter of when. All of us will be impacted, me included, have been, by cybercrime. And so, you know, that's an ongoing challenge, because just as we develop tools to kind of whack that mole, the next, opportunity for a criminal comes up. And so that's a huge challenge for us as well. And then just continuing to grow. We are all for-profit businesses with shareholders and responsibilities, not only to our communities, but to our shareholders. And so continuing to grow in good times and in bad times.
Yeah, and I think for us, it's a lot of the, the fintechs that don't have the compliance that we do, all the standards. So it's a little bit concerning, because they can do a lot of things that we can't do. And, it is very impactful.
Melissa, you touched on it already, but we know we're at less than 3% unemployment rate just here in Central Ohio. It's impacted all of us, especially small and mid-sized businesses. How have your organizations been impacted by the slow unemployment and the labor shortage, and what are you doing to manage your way through it?
So a couple of things. So we're all impacted. I mean, we're competing for talent, all of us in this room, every single day. And so, I think we all, again, try to think about how can we be employers of choice. And so I know many of us have announced, increasing our minimum wage and making sure that they're at living wages at $15 an hour as starting points and so forth, something that certainly we have done, and others as well. So trying to compete, certainly for the talent in that regard, but it's more important to develop the talent. So it's our partnership with high schools, with not-for-profits. It's our partnerships with colleges. We do a minority business case study every year in partnership with Ohio State and historically black colleges. So we are looking for talent in all sorts of areas, retraining talent if we need to. So lots of investment around that to try to be as flexible and open as possible, because the skills we need today are very different than the skills we needed 30 or so years ago.
Right, and I just add, not only are we trying to recruit the best talent, but we're also very focused on developing internally, and a part of that is retention, right? The first step of having someone with you long enough to develop them is to keep them long enough to help build that career. So we've gone to more of a virtual workforce in a lot of our roles that has helped our retention and has helped us to be able to connect with those people despite them being virtual, and also show them different career paths within our organization so that they know they don't need to leave to find that next opportunity.
And at the risk of thinking that all things lead to technology, but in some cases technology is an answer for us. So if there are jobs that can be done via artificial intelligence or investments in technology, and then redeploy those workers into other areas in our firm, again, it's a retention play for us, a development play for us, and a way to deal with some of the talent and labor shortages that we all face.
Steve?
Yeah, no, I agree. We're doing the same things. And, the important thing is, that first 90 days and how you're treating that new team member and getting them encompassed within the institution.
So let me ask, especially in the financial services industry and what you do, because you are such a forward-facing, public-facing and you're dealing with people's money. Are socials, are the soft skills, the interaction skills, are those becoming more important as time moves forward? Or because of the technology and everything is, done right here, our iPhones and everything else, has that reduced the need for strong soft skills?
I don't think soft skills are critical. This is a people business. It's always been a people business, and you can never replace that moment sitting across the table from a corporate client or from somebody buying their first home and have that with a machine. That just, you can't develop trust that way. And our business is foundationally based upon trust and relationships, no matter what sector you are. Now, can we replace people in check sorting? Yeah, we can, and we probably should, because that's not a great job anyway anymore. And so, but that social skill and that emotional and ability to develop relationships, it's critical to all of our businesses.
Especially anything client-facing, right?
Right. And I just add, when we're recruiting, that's one of the challenges we face, right? The kids coming out of colleges interact in a different way. So our litmus test is, you have to be able to look me in the eye, have a genuine conversation, make me feel a level of trust for you. And
Put down your
some,
phone.
Yeah, don't look
some
at
are
them.
better than that than others. So trust me, it changes how we onboard our people when we do hire new people. It changes the way I raise my children, to teach them to look people in the eye. And that's the thing that I worry about, is that the next generation, and it's not all, but the next generation really becomes less and less client-facing, client-focused, and we're up against the Amazons of the world. Everyone wants the best client delivery and the best client service, but yet nobody wants to be client-facing. That's a challenge.
It's interesting. We have a great small business council at our chamber, and we've started a leadership development and succession planning program because so many of us boomers are going to be moving out of the job market. We need the Gen X, Y, and Zers to come in behind us. And the number one need that our small business council wanted in this were soft skills training. More than anything else, they said, for succession planning for the next generation, we need soft skills training, which is really interesting. Those scoundrels in the media, they're predicting another recession. It's almost like a self-fulfilling prophecy. We've been on this great tear, this great run and bull market for so long. It's like, we're bound to, it's cyclical. It's going to happen. It's a matter of when and not if. Steve, with the media predicting a recession, have you and your colleagues and counterparts tightened up your credit standards at all?
I actually read something, I think it was on Monday in the Wall Street Journal, that in just surveying of some large banks, that there's been a few of them that actually have reduced their, or tightened up their standards. And I think that's primarily because maybe they didn't make some of the right loan decisions probably within the last year. And so they have tightened it up, but not, not at our place. I have not seen that or anybody saying, hey, there's a recession coming. We're not going to do this or that or that. So I haven't seen it at our Marriott.
Right. No, our economists do not predict a recession in the near term, and so we stick by what we call a moderate risk profile, right? If we made this loan 3 years ago, 5 years ago, those are the ones that are going to turn in the wrong direction, but we don't change how we approach things on a day-to-day basis going forward. As Melissa, I think, said, we're very relationship focused, so as long as we stick by our credit metrics and keep those relationships tight, we want to be able to work through with our clients through the good times and the bad.
That's an important point. The hallmark of a good banking relationship would be one where, through good times and bad, there's constancy and there's clarity about what's expected in that relationship, both from the borrower and from the bank. And yes, as an industry, 8, 9, 10, those were tough years, and banks were sort of, flipping around and getting tight. But I think we've all learned a lot over that period of time, and I think going forward, I'm quite hopeful that there will be a much steadier response and a steadier hand throughout good times and bad.
What are your small business and mid-sized business clients saying? Are they starting to see a softening in sales, or are things just going straight ahead for them?
I mean, it's slow but steady from what I hear. Third quarter, we did hear a lot of noise that they were starting to see a slowdown. I think maybe it was just a lot of the tariffs. But then in late December, a lot of them were saying that, wow, I think we've seen the bottom, which is surprising. So I don't know what's going to happen with this new corona disease. I wish I'd name it something different because I always think of a beer. So,
Let's hope we don't get viruses to Corona beer.
exactly. I'd be dead.
Mary?
Yeah, I mean, I think the biggest challenge right now is just the unknown, right? We talk about interest rate instability. We talk about instability with the political election coming up. The unknown is, I think, what is the biggest concern for businesses. But what we see in the small and mid-sized businesses is that projections are, flat to up for 2020. But a lot of that comes from a lot of hard work from our clients. They're tightening expenses. They're looking at every line of their income statement, and that's what's going to ensure their success.
And if there's a lever on that success or something that would keep it down, it's labor. So
Yeah.
all things come back to the same set of conversations.
It could actually be the low unemployment rate, the lack of
Right.
available and qualified labor that could actually propel us into a bit of a downturn. Well, I'm fortunate enough to serve on the Columbus Advisory Council for the Cleveland Federal Reserve Bank, and the Federal Reserve Bank is predicting that we would end 2019 with 2% GDP growth, and now they're predicting 2% GDP growth for 2020 and for 2021. So they say if we do have a recession, it'll probably be like 91. Has slipped into my long-term memory, so if I remember, it was shallow and short, so which is really good news, I think, for all of us. Okay. What's your advice, have to ask a couple of business questions, right, to a consumer or to a business owner for creating a strong relationship, that relationship question with your bank and in particular their individual bankers and lenders? You know, on the consumer side, what should I expect from my relationship with my banker? Mary?
I would just start by saying your bankers want a relationship with you, so take them up on that. When people are starting a small business or growing to the next level, you always hear the suggestion that they're aligned with a good accountant, they're aligned with a good attorney, and we would hope that banker adds that list. You should have a banker standing by your side that already knows you, knows the business, and knows what you want to achieve so that we can be standing there next to you helping you. So don't wait until you need this much in capital. Start the relationship sooner. Let us be a partner and advisor to you, and let us bring ideas to the table that maybe your circle of advisors hasn't thought of yet.
Yeah, the other thing
Go ahead.
I'd like to add is that, be open and honest with your banker, right? And communicate, because if you have a good banker, they're your advocate within the bank. And, things always don't go in a hockey stick, right? And if things do go down, you want a banker that's going to be there for you, knows your business, and can go and talk to your team and say, hey, we need to continue doing this and this and this.
Right. Bankers don't love surprises. So we don't react well to that, and we're not that zippy. So it is. It's communicate, bring them into the fold. I think sometimes there's this fear of telling the bank that suddenly the bank will then pull your credit line or do whatever, particularly on the corporate side. And that's the farthest thing, frankly, from the truth, particularly if you're communicating. You asked what you should expect, too, so flipping the switch here a little bit. If I'm a client, especially, again, a corporate client, but even an individual, you should expect your banker to, A, invest, as you've just heard, in that relationship, but B, be bringing you new ideas. So, you have a business expertise or a personal expertise in a particular area. We have an expertise at some level in what we do, and part of our job should be connecting those dots for you. So, we have the opportunity, the great privilege of seeing lots of different companies or lots of different individuals. We see how technology is deployed. We see what people are struggling with. We can help you connect those dots, and you have a right to expect those ideas, not sales, not products, but ideas and suggestions, which then it's up to you to decide whether they're relevant to where you are at this point in time and can be helpful to you.
And it's just not when you need a loan, right?
Right.
It's like other solutions that your bank can help you to become more efficient.
Well, let's stay right there with you, Steve. For our budding entrepreneurs, if there are some among us, if you're starting a new business, what do you need to know, especially from a banker's perspective? And will your banker help you develop your business plan?
Will help, but when we sit down with a potential client, we like to know, what is your business model? So have that down. What's your value? what's the secret in the sauce? I mean, what makes you different than anybody else? What gives you a leg up or your disruptor, et cetera? We do like to have a plan. We'd like to know background, management team. Mary, I think you said it. We want to know, do you have a good accountant? Do you have a good attorney? Projections, I'd like to see at least 3 years projections. And I like to see a plan A, a plan B, and what I've seen from the most extremely successful companies that they do have a plan C. And during the downturn, the companies that had a plan C, they made it through because they were always adjusting it, and they knew what was going on and all the levers they had to do. So,
Mary?
Yeah, I think Steve has summarized it well. I think the knowledge of your business and what you're building is most important. Let us bring the knowledge to the table from the bank perspective, but you have to have done your homework, whether that's, years of plans and projections or whether it's an idea and a solid plan beneath it. You've got to start somewhere. We look to you to tell us what is your business, how are you going to be successful, then we can supplement with the advice and knowledge that we can bring to the table.
We have an incredible community here in the Columbus region, very altruistic, very giving, other than being significant employers throughout our region. What else do your banks do to help positively influence our Central Ohio community? Steve, you want to jump in there?
I don't want to get bank specific, but we have a local foundation here, and so we get funds, to put, so it's a local decision, so we get the ability to place funds where we want to locally, so it's not corporate saying, hey, you need to put funds here. So that's one of the things that we do, and our philosophy, and my philosophy is that, if our community is not doing well, we're not going to do well, so we need to be involved in the community and give back. It's very important.
I think we all have foundations through which we support, and each of us might have a little bit of an expertise or an area of emphasis for our philanthropic support. And you can, PNC's been really great at some things some in our community. I would also say there are a couple other areas as employers and as corporate citizens that we all pay attention to at varying levels. First is around diversity and inclusion. So making sure that we walk the talk, so to speak, so that our hiring practices, our promotion, our boards, our executive leadership are reflective of our communities. They are diverse, that we think about how we promote from within those areas, so that's really important to us. The other piece is a conversation around sustainability. So, for example, I know as we've built branches, and I think everyone else has as well, thinking about our LEED certifications, thinking about, ours is a paper-based business, thinking about how we cut down that paper. I know the printer tells me when I'm running out of my monthly print quota every month. So, but I mean, small things and large things, but really thinking holistically about our community, beyond putting money, which is really, really important, but beyond putting money into the philanthropy, but also supporting and modeling behaviors in many other ways.
Right, and I'll just add that, I feel very fortunate to be in the city of Columbus and to be with an organization and other organizations that are very aligned with the goals in Columbus. I mean, you heard from our partners about low-income housing and the need there. I mean, that is something that banks play a significant part in, and so that is so important. PNC specifically focuses on early childhood education, and that's so closely aligned with what our mayor and our city council is trying to enact, and is so important, we think, to helping cure the workforce development issue for the future. So I think those are the areas. In addition, I think one thing that wasn't mentioned is, years ago, it would be ourselves and our peers that were asked to sit on every board in town. And I think we've all done a very nice job of elevating future leaders in our own organization to be great partners to our nonprofit partners, to sit on boards, to mobilize, to represent our banks there, and have our bankers also understand better what's going on in our community. So that's a significant role we play. I challenge you to find any nonprofit board in town that doesn't have at least 3 to 5 bankers sitting on it, and that's meaningful, hopefully, to our partners. And a waiting list, right.
That's great. Well, we're talking about corporate social responsibility, and there's a tremendous amount of this in our community. We really are blessed. What does that mean to each of you, corporate social responsibility? As you advise the companies that you lend to, the small and mid-sized businesses that you support, that you interact with on a daily basis, Mary?
Yeah, I mean, that should be first and foremost of what we're thinking about every day. Who are our stakeholders? These are our employees, these are our communities, our customers, and our shareholders. So there are a lot of things that we do in order to align with that, but I think it starts with all the things that we've talked about already. You know, being a responsible bank, supporting our community, focusing on the customer experience, and also a talent-driven culture, right? We can only help propel ourselves and our communities forward if we really focus on those things. And that's the meat of what we bring to the table that helps strengthen the community. There was mention about, being responsible building. We are all thinking about how to be more responsible with how we handle paper, how we build our buildings for the future and for the environment. So those are things that I think are on every bank's mind. We might approach them in different ways or focus on different high points, but I think in all of our organizations, corporate social responsibility is what we're talking about day in and day out.
And not only that, but not only just externally, but internally with our own team members, right? It's important, right?
And at a federal level, I mean, the Community Reinvestment Act, which has been in place since the 70s, while none of us, I think we all do the right thing and do corporate social responsibility because it is the right thing, and we are invested in this community and in every community that each of us operates, because if the community isn't successful, you don't need banks, right? And so there is a very symbiotic relationship there. But the Community Reinvestment Act, CRA, also makes sure that we are measured and held to standards around making investments in a variety of, whether it's lending, investment, our investment activity, and so forth, around low to moderate income communities. So we take it seriously on a number of levels.
Might be a minute or two early here, but as the great tradition of this organization, they really appreciate and enjoy audience questions. So if you do have a question for our esteemed panel, please step up to our microphone over here to my left and to your right, and in just a minute or two, we'll start taking questions from you. What's the future of banks and banking? We touched on this in our early questions, but we talked about the demise of branches. Are branches and even the way we bank still relevant in this time of cryptocurrency and mobile applications and so on and so forth?
I think there's some study, though, that said that 70% of people have been in a branch in the last, 3 months. So just when we were quick to say, well, that's my mom and not my kids, which is sort of, what the demographics or whatever, it's not the case. It is situationally moments of great import to people when they come into a branch often. Now, for some people, it is a daily occurrence because they happen to like our branches, and that's great, too. But the future of banking is, I really think it's a great business. I think it is, just as we were talking about, one, infused with corporate social responsibility and infused with our communities, being a part, being important in our communities. And so I think we have a long future ahead of us. I do think it will evolve, it already has, to a multi-channel delivery system, where you are online, you are mobile, you are physically present, and who knows what cryptocurrency or some of those things will mean for all of us. And that, that's for another day. But I think it will always be here, and I think it will play an important role in our communities.
And back to the statistics, I think I read somewhere 75% of the wealth in this country is for people that are 55 and older, and they still like to go to the branch. It may be just a different outlet. You're not going to do a deposit at the branch, but maybe it's more of a personal wealth or mortgage, something simple like that, or not as simple as just your deposits.
You want to know who you're dealing with.
Right. Especially when it's your money, right? Your most valuable asset for the most part.
And I think I agree with Melissa that we do have a long and hopefully successful future ahead of us, but I think we do need to keep in mind that, we are not just banks, we are now part of the broader financial services industry, and we have to be nimble, we have to invest in technology, we have to act and react based off what our competitors are doing, and our competitors are no longer just our peers. So that's something that we cannot lose sight on. We can't rest on our laurels and do business the way that we did 20 years ago, because that relates to a smaller and smaller subset of our population with each year that passes. So eyes wide open as we head into the future.
Yeah. What I read that Amazon was teaming up with Goldman to do small business loans.
Mm-hmm.
Yeah.
Well, we do have another question or two, but I see our dear friend, longtime Columbus Chamber colleague, and our community's economist, Dr. Bill Lafayette. Bill, would you like to lead us off?
Well, thanks a lot, Don. Thank you all for being here. A point that you made, Melissa, kind of in passing, triggered something for me. And that is something I've been thinking about an awful lot, the transformation of our economy resulting from technology and the rise of artificial intelligence and so forth. That is obviously going to have a big impact on your workforces. So what do you see as the emerging occupations, the emerging skills that you're going to need that we as a community have to help you prepare for? And if you have any thoughts on how we transition folks from the current skill set to the new skill set, that would be great to hear too. Thanks.
Sure. I'll jump in and
Yeah.
invite the rest of you.
I'll give you my part.
So first, technologists. I mean, you touched on artificial intelligence and so forth. So, we have so much data at our fingertips in banks and in financial institutions. And so figuring out from a technology perspective how to use it, how to guard it, how to control it, how to slice it and dice it, data analytics, all those kinds of things, which, well, we've always had that data, but we didn't, I think, fully understand it 30 years or so ago. So I think that's an emerging area as well. I would go back, though, to the question that Don asked as well, which is we will always need people who want to be out in front, to be on what I'll call the sales or the client side. So that will never change, but that is a skill set as well. How do we build for that? The banks are taking an active role with everybody from Columbus State to not-for-profits like Perscolis, which has an IT on-ramp, and some other organizations. There are a myriad of them probably in this room and certainly in town, to help do that sort of training and retraining. And then we all do it internally, too, or at least I can speak for us, where we are taking some people where we know that perhaps that job is going to be reformulated in some fashion, and we're proactively putting them through new training so that they're ready for whatever either that iteration of that job is or for some future job within our company. So kind of three.
Yeah, I'd just say, technology and cybersecurity certainly are so important to us, but we also need all, the majors that are out there, we need them to think about banking. A lot of people don't think of banking from a career perspective, and myself included, I thought I'd do this for 3 to 5 years and then go do something totally different. You can build a career in this, and a lot of young people just don't think of it. It's not as sexy or as exciting as, working in Silicon Valley, but we still need those skill sets to give their skills and abilities to our industry. So that's a huge one.
I still feel a noble job, right? Helping other people out at the end of the way. That's the way I look at it, is that we are helping, business get started, or people buying their first home or getting their car, so it's a very noble business, and yeah.
Great.
Jane.
I'm Jane Scott with Metropolitan Club. We haven't really talked about the housing situation on the other end, not the affordable housing, Jonathan, but we're going through a time where housing values in this city and on our communities are going through the roof. Are you a little bit concerned about making those 30-year mortgages, not knowing for sure what that housing value might be? We have a little bit of a bubble here. Is this a concern to the bankers, and should it be concerned to the folks that are spending $20,000, $30,000 more than asking price for a house?
Melissa alluded to it earlier, the financial crash and the housing bubble that burst several years ago. I take comfort in the fact that the pendulum has not swung completely back to where it was when we were doing signature loans. How much is your house worth? How much do you make? Just signed here, stated income, right? So the regulations are still in place, and we follow those regulations because there are people looking over our shoulders for that. So while people may be paying inflated prices, the banks are still lending on the appraised value, and we do put value in those appraisal partners of ours to make sure that we're not overextending. Could people still be overextending on their own personal if we hit into a recession? Absolutely, but I don't think we've gone to the extent that where we were in the 2007-2008 financial crisis.
But there are some zero-down mortgages creeping back into the lending picture. I imagine, though, that the restrictions are a lot tighter than they were 12 years ago or so on those loans, right? Okay,
It's a different, we are not making the same loans that we made back in those days.
great. That's great.
We have
That's
banker's
great.
amnesia sometimes, but not so much on that front,
Good.
so.
Very good. We don't want to go through that again. One of our great community citizens and developers, Bob Weiler. Bob.
Well, thank you, and thank you, panel. Great panel. Got a question with regard to the federal deficit going over $1 trillion, as in T. Nobody in Washington seems to be very concerned, and I just would like to ask you what impact you see, if you look in your crystal ball, that this might have. I thought I'd throw you a softball question.
I mean, for me, it's a very concerning, right? The debt, the deficit, it's extremely concerning, and, you know, I do feel it's out of hand, and I know we get compared to other countries where we're nowhere close to other countries, but still a big concern. But unfortunately, the Fed keeps rates down, and, you know, we can, you know, at this point in time, afford the debt. It'll be interesting to see if rates go up to 9, 10%, 8% on our deficit. That'll be
20%.
20%. Well, who knows? But yeah, or we'll just keep printing more money. So
Yeah, I think, you know, similarly, the concern is in a rising rate environment, and we have been blessed with such an historically low rate environment for such a period of time. And, you know, should we see a rapid rise in rates, not only will businesses be impacted, but that federal deficit will be a significant issue, and safety nets will be impacted for our communities. I mean, there's a whole cascade of things. So I think it is an issue that we all think about. It's certainly a part of our macroeconomic sort of risk parameters that we think about, but it is not something that we're kind of decisioning against at this point in time.
And trust us as bankers, we don't love a long-term low-interest rate environment either, right? Yeah. That has impact to our financial results as well, but we hope that when things do turn, that it's in a tempered way, in ways that our business clients and our consumers can manage through.
Many years ago, I covered local governments, and what I could never understand is every village, every township, every city, county, state, you know, they all have budgets that must, you know, they cannot outspend their resources. Yet the federal government does it and has done it. What is our debt? How many trillions of dollars is our debt now? Does anyone know?
23 trillion.
$23 trillion. I mean, the interest on that alone is enough to send us into, and we're really pushing this upon our next generations if we don't deal with it at some point.
We should ask Mr. Dorian for help with the federal government here. He's one of
Dorian
the,
would have never let this happen.
Never.
If he
Great
was in
American.
Washington. Never. Yes.
Hi, I'm Kiki Kerner. As a real estate agent, you know, we see a lot of people coming into the area. We also have a lot of people who are coming with your banking already in place. And sometimes, because they're coming from out of state or other regions, it can be really difficult because of how we do our contracts and things like that. How are you working on a national and local level to kind of combat some of those, like what you said, customer service issues?
So clarify a little bit. When you say they're coming into
really
town with
nervous,
a
sorry.
banking relationship, how does that cause issues for you?
Just because we get a lot of pushback, and sometimes it's delayed some transactions, which can be very frustrating for the consumer, mainly because we have so many people just kind of coming into Columbus, and they're coming from out of state where policies are very different and underwriting is different and people view contracts differently. And so I'm just kind of curious how you're working with the national level to kind of like combat those issues.
I would say, I mean, our mortgage business is absolutely a national business, and we serve mortgage clients even outside of our footprint. While our footprint is growing to the west, we are servicing clients in all different regions. So I would say if you're seeing contract issues or slowdown issues, that's something that needs to be elevated within that organization. But our goal, and specifically you're talking about home mortgages, purchase mortgages, our goal is to be in a service delivery model where we are not holding up the purchase, the closing, et cetera. So if you're seeing that more often than not, or if you're seeing it more often with certain banks, I would say, reach out to us and see if we can help to solve that. Not case by case, but I mean, you want to elevate that within the organization. If you were to tell me I've seen this 15 times in the last month and 10 times it was a PNC client, I'd want to know that, right?
Honestly, it's been kind of, it's been like a broad spectrum of banks. It's not necessarily one particular one in general. It's more the national level banks where people are bringing their bank into Columbus. Does that make sense? Like, they're coming with their lender and their banker is already in place, and they're coming into a new market. So it's kind of like that cross piece. Anyway.
I mean, we are all obviously parts of national banks. And so, as Mary said, we try very hard, especially in something like a mortgage, to have a high degree of consistency, certainly allowing for individual state regulations or laws that would govern those kinds of transactions. But that kind of a business should be, in effect, transferable, just as a checking account in Ohio should be very similar with KeyBank to a checking account with KeyBank in Maine or Alaska, where we also reside.
So these are some chamber statistics that we share with our new members, and we're growing our membership, which is a great thing. But we have 120 people moving into the Columbus region every day. 120 people are moving in every day. We have now surpassed 2.2 million residents in our 11-county region, 2.2 million. Predicting, and you've heard this probably, 3 million by 2050. So in 30 years, we're expecting to add net another 800,000 or more residents. Franklin County has topped 1.3 million in population. Franklin County. We're now the largest county in Ohio, and just in the last year, we surpassed Cuyahoga County, which is great. We're now the largest county in Ohio. So you don't have to. There was a day, maybe 10 or 15 years ago, when in order to grow your banks, you had to borrow customers from your competitors. That was about the only way to do it, right? Yes. But now, how do you capitalize on this growth, on the new residents of Columbus? How are you reaching out to them? And I know we have another major bank that's recently come into the area for the first time. So
there are plenty of banks, big, little, in-state, out-of-state, all that kind of stuff. There's no shortage of competitors in our space. But so many times those people are already coming with a banking relationship. So if they're moving from poor old Cuyahoga County down to central Ohio, they may already know well PNC or Key because we have big presence there, and they may just simply be transferring that relationship to one of our local branches or whatever. If they're coming from out of state and need to restart something, that might be a different thing. I think we all have what we call at-work programs, which is really part of our financial literacy offerings that we have. But we partner with businesses to offer financial education in the business, and sometimes that's how we're meeting some of those new employees. We're going to a new employee orientation. We're offering, again, not a cheap checking account, although there's certainly that as a part of it, but much more about education, about helping people plan their financial wellness journey, and that's how we're then, bringing people into our fold, so to speak.
I think it's much more proactive than it used to be. We're out in the communities, we're out through our banking programs, but we're also the financial literacy piece that Melissa mentioned, I think is important. We know that a lot of people moving into the community may not be English speaking, right? So we need to have financial literacy in different languages. We need to have employees that are engaged in those communities, and those are real opportunities because a lot of times those folks aren't coming with a prior banking relationship, but they need advice and guidance and help. So I think that's another opportunity. Our goal is just to grow, get our fair share of the pie, right? As Columbus grows, we should be getting at least our percentage of market share because we are heavily banked and this is a very mature market, but we also know it's a growth market. And so how do we capitalize on that in a good way?
Steve?
I agree. We do the same things. I mean, yeah. And then having people, that speak different languages that go into communities and, set up accounts and go into schools and, yeah.
Andrew.
Yes, hi, Andy Campbell. We've got a few more minutes here, so I've got a question. I know the tradition of banks is, and then maybe the stereotype is that you're very conservative with good reason, but I'm wondering if you could each share maybe a little case study about a lending program or a small business that you were a little iffy about, but you took the risk and it paid off in the long run.
I mean, I don't know if you're just talking about here locally, but in general, we have a loan that's called Simple Loan. and I think it's for $750 or $1,000. It's a mobile app where you can go on and, as opposed to paying 18, 20%, right, or as opposed to going to a payday lending, you can get approved pretty quickly, and the standards are lower. However, you got to pay it back in a certain amount of time, but there's not a lot of the fees. I think it's like 20% of what you pay with payday lenders, and we've gotten all kinds of accolades, throughout the country, for doing that with, for a lot of the, I forget what they're called, but they, I don't want not to. Anyway, it's a lot of the people that try to help people, get their feet back up. So that's what, credit counselors, yeah. So, yeah.
I don't know that I have a specific case study example, but I would just tell you, like my peers, as an SBA preferred lender, that allows us to make those decisions in-house, to make those decisions quickly, and to offload some of that risk. So our SBA program really helps us to align with our customers, to be able to give them the support, but gives us a little bit less risk in the transaction. So the key there is you have to have people that are educated in that space, that know how to get a deal done, because it is more complex. It does take more time. But that's, the specialists that we have that can guide people through that process, I think really adds value and allows the bank to start those relationships even sooner than maybe we would have with our traditional, credit culture.
Taking it slightly differently, so the relationship notion. So I have the great benefit of having done this for a long time, and there are clients that I have known from literally some of their first days, and I have watched them as they've worked with our branches and our small business, maybe had an SBA loan, continued to grow, and transferred into maybe our middle market lending group, and at the time grown from $2 million company or a $3 million company to a $100 million company, employing all sorts of people, now at a place where they can give back to the community. And so those are the stories, those are the opportunities that, again, as a banker, that's what gets you up in the morning. That's the stuff that is really, really special. And a lot of those are companies that we all drive by every day, on McKinley Avenue or places like that, that we don't know. They're not the sort of brand names, but they are great companies that employ families, laborers, all sorts of people, and really add to the vibrancy of our community. And those, to me, are the stories that really are fabulous in terms of growth and support of a community. And somebody had to take that first step, that first risk on the first idea with them.
Well, we look at the first, what's called a unicorn, right? Cover My Meds, a family, a Columbus family, and the first Central Ohio company that was sold, it was sold to McKesson, right, for more than $1 billion, $1.1 billion, a great success story. I've got to ask this question. Are we overbanked here in the Columbus region? I mean, are there just simply too many banks? We have all of these wonderful community banks and all of these, we used to call them money center banks, right? Or regional, regional banks. What do you think? And will we see some fallout as a result? Will we see another round of mergers?
So there's two questions there. The first one, are we overbanked? So, if you heard me privately in my conference room on January 3rd when I'm looking at my budget numbers for the next year, I'm bemoaning the fact that we're overbanked, and I'm telling, our financial headquarters, oh, you don't understand, Columbus has so many banks, right? So, yes, I would answer the question, yes. But the reality is no. No, we're not. We have a great continuum of banks. We have startup banks, we have medium-sized banks, we have large banks. And I think we all play a role in this community. And frankly, often we all work together on certain things. So yes, we are competitors, no question about it. We compete every single day. But I think we all take our responsibility to the community very seriously. Will there be, the second question, though, kind of embedded in that is, will there be mergers? Sure. I know there's some colleagues here from the Ohio Bankers League. They see that across the state all the time. The cost of technology and the cost of investing in technology, both internal technology, both for regulatory, but also for really offering client services, and then the whole cyber investment is extraordinary and only growing. And so at some point in time, small banks will have to make decisions as to whether they merge, whether they figure out how to grow more quickly in order to accommodate those needs. So yeah, I think we'll constantly see those shifting sands, but I think every time we see mergers, we sometimes turn around and see a new bank popping up as well. Net, the numbers are down, but I think that you're still seeing people open up banks.
No, I personally don't think that we're overbanked. I sit on a national call every Friday, pipeline call, and I nowhere close to Chicago, or Los Angeles, or even St. Louis, or Denver, or New York City. I mean, so, there's some banks that I can't even pronounce that they talk on the phone. So, it's not, I don't think that we're overbanked. And along with what you had said, absolutely, they have to. It costs a lot for IT, right? And their customers are demanding,
I think, I agree wholeheartedly on the first question. On the bank consolidation, every year we say, banks are going to consolidate. This is going to be the year. But all the articles I've read recently about 2020, all the stars seem to be in alignment. The low interest rate environment, the potential change in government, people are going to try to race to get those deals done. And it is driven by the expense of technology. And some have hung on, and I give them credit for hanging on. But when you look at the number of banks that just don't have the magnitude or the substance to be able to sustain, I think we absolutely will see more mergers and acquisitions in 2020 than the prior 2 or 3 years.
One final question. Introduce
you.
yourself, please.
Carol McGuire. Melissa, you mentioned diversity and inclusion, and I think we do a pretty good job of it in this community, particularly in the arts. I'd call out, Kappa's Festival Latino as an example of one of the largest initiatives that we do through the arts organizations here. What specific programs do each of you have that encourage and support diversity and inclusion, both within your organizations and outside it?
I think all of us would say we have, it starts with the employee business resource groups that started years ago, and at our organization, we've now grown to a diversity and inclusion council. We have some leaders of that organization here today, and it really is just living this day to day, but not just internally focused. So your question is spot on. We started more internally focused by allowing people to find those connections. Now we're figuring out, how do we do this in the workplace? How do we do this in the marketplace? What do we bring to the table to attract clients? And what do we do to show them that we are representative of the community that we serve in? So it's not an easy task. It doesn't happen overnight. And banks traditionally have been known for their lack of diversity. So it is a mounting hurdle to overcome. But I think it starts with our hiring practices and then the retention piece I spoke about earlier. We can look at our statistics and say we hire equally male, female, we hire equally people of color, et cetera, but the rates 3, 5, 7 years out, those people are self-selecting out of the workplace or out of our organization. What are we doing to stop that and to show them that this is a place to build a career and that we want and desire that diversity?
Something we've been really proud of at Key is our Key for Women program. It's been longstanding. It is really based upon the promise or the knowledge, the statistics that women have a more difficult time. More women are starting businesses. The statistics show that, and yet they have continuing challenges with access to capital. So we provide advice, connections, and empowerment, and so we want to make sure that we advocate for women, and we do that in a number of ways by connecting women, by being very intentional about the lending that we do to ensure that we are helping women be ready, women business owners be ready to ask for those loans and to get those loans, so that's really important. And then, we have, like Mary said, all the employee networking groups and things, but as I said before, I think walking the talk is really important. So 50% of our board is comprised of diverse talent, whether that is veteran, minority, or women. And I think Columbus, a shout out to Columbus, because you have 4 regional bank presidents as females, which is highly unusual in any other market across the country.
I am the odd man out in many ways.
Please welcome back Mike Voinovich to close out our panel this morning.
Thank Thank you, Don. I hope everyone found today's conversation enlightening and has evolved your thinking towards the banking industry. We're certainly fortunate here in Central Ohio to have such a collaborative group of banking partners. We encourage you to continue the conversation with coffee and cookies. And guests, we invite you to explore membership at the membership table in the lobby. So let's thank our sponsors one more time. The Robert Weiler Company, the Ohio Capital Corporation for Housing, Accenture, Economic and Community Development Institute, and the Columbus Chamber of Commerce. And of course, our fantastic speakers today, Melissa Ingerson, Mary Auk, Steve Bennett, and Don DePero. Thank you.